What's up, everyone? I want to go over the main reasons why I see traders fail. I've talked with and I've sat with many traders over the past 6 years, and I've seen some really talented ones fail. And I've seen traders who were on the verge of a breakthrough becoming profitable, but they failed to do so because of the points I'm going to describe in this video. They're very simple, yet many overlook them. And the good part is they could be fixed and worked upon. In this video and the video lessons which I have in the course will help combat this. But before we get into the main points and the charts to back up the lessons, I recommend everyone to follow me on Instagram at Ameritrade. I will link it in the description below. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. The link is in the description below. You're definitely missing out if you're not following it. But now let's get right into this video. In one of my past videos, I said that I would get into this message that I posted in the Discord. I'm going to break this down exactly. But the number one reason I see a lot of traders fail is they trade without an edge. An edge is something that gives you an advantage over the competition or over the rest. The market is a zero-sum game. When someone wins, someone else is losing. So a lot of traders trade without an edge, something that works for them, that's been proven to work, something that's been back tested and forward tested. And this is their system. It's unique. It's like a fingerprint. And every trader is different because everyone's going to have a different personality. Everyone trades different names and everybody has a different style. However, the main points that I've seen the most successful traders utilize and the ones that fail and struggle do not utilize is they fail to understand this. So there's two main ways to trade. One is systematically, and the second one is discretionary. Systematically trading means you've collected data, you've ran statistics, and when you see something of your system plan out, you know you have a 80% chance of it working out. Or when all your factors align, when your moving averages cross, when we hit a demand zone, when we break above a key level, and I see the MACD crossover or I see large buying over 50 lots come into the market, then I know we have a 90% chance of this thing moving higher. That's systematically trading. That's something you've back tested, collected a series of data, and you only trade off of that data. Then there's discretionary trading where you act upon your discretion in a systematic approach. For example, this is basically how I trade is I have my supply demand zones. I'm a price and volume trader. I use supply demand zones and key levels, and I consider these my areas of interest. So I've came up with, I didn't come up with, but basically a simple math equation. I think I learned this back in like fifth grade or something like that, where mx plus b equals y. And how I label this and how I relate this to the market is M equals my area of interest. I know traders on Wall Street that make over 8 figures a year with the same concepts. Depending on the market they trade and things like that, the concept's the same. They come up with their M, which is what I call my area of interest. For me, my area of interest is a supply or demand zone. Then we have X, which is market context, and this changes per environment. This factors in buyers and sellers. This factors in volume, volatility, and the type of environment and the conditions that we are trading in. B is my confirmation. For me, I use price and volume. There are many different confirmation factors that I do use depending on the setup that we're talking about. And then that's going to equal Y. That's a proper result, win or loss. You cannot win 100% of the time in the market, but when I see these factors align, I get my area of interest. I could read the context properly. I get proper confirmation. Then I know I have to put a trade on, and I can't be upset with the win or the loss because I followed my plan, and that's my edge. I've tested my edge, back tested it, forward tested it, and it's something that I continuously add to my journal and tweak to fit current market conditions, fit different environments, and it's something that I build upon because I know it works out for me. And every time I deviate away from my edge or what I know works for me, then I lose and I don't feel comfortable with trading. I am repetitive in my videos with this because the main reasons why I see traders fail. I've dealt with traders that, like I said, are really good and know their stuff, but they fail to make money because they trade without an edge. I recently did a video on gambling in the stock market, and this is basically a gambler in the market. A lot of traders fail because they enter with the gambling mindset. They trade without an edge. Some traders, let's remove the supply zone, right? They see the market coming up, they see it reverse, maybe they see a hammer candle or some type of candle rejection, and okay, we broke below VWAP. Let me play SPY puts down here. My stop loss above the high, right? This is not something that they're confident with. This is not something that they've tested. They're just entering because they see the market coming down and they think it's a proper time for them to enter. There's no edge in this. There's no system. There's no style. Another way to look at it is, trading in conditions when they really shouldn't be trading in. Maybe when the market is balanced or when it's very flat. You are trading without an edge. And if you don't know your edge and you can't define your edge and what it is, then you need to reconsider how you trade, because if you do not have this, you are severely going to struggle. Believe me. So please develop your edge. It's very, very important. Point number 2 is you do not implement proper risk management. This comes upon us because of the main reason that I see is a lot of traders get sucked into day trading because they see people on Instagram or Twitter or YouTube flaunting cars, flaunting watches, flaunting, vacations when it's very possible, but they take the new traders and they implement in their mind the wrong thinking with the market, and they think that they could teach them to be a millionaire tomorrow, or they could teach them to be a millionaire by next week. It's possible, but a lot of traders enter the market with the mentality that they're going to make a lot of money in the short amount of time. And because of this, they swing for home runs. And the more times you swing for a home run, you're going to strike out if you don't know how to swing. So a lot of traders do not implement proper risk management. Now, I want to get into this Discord example that I put. Let me minimize this, pull up Discord again. So if you are new or you've been trading for a while and you're failing to be consistent, or you're blowing up accounts and depleting your money, here is what you have to do. When I first started trading, I blew up accounts, I lost a lot of money, and I contribute this to going into the market blind without an edge and trading with a too large amount of money. And I did not implement stop losses, and I didn't implement proper risk management. So here's what you have to do. You have to trade with small size. I don't care if you have $100,000 in your account. I don't care if you have $1 million in your account. If you are a new trader and you do not have an edge, then you should be only trading with 1 to 3 contracts, regardless of your account size. This is if you're a failing trader, you're blowing up, or you're just on the verge of becoming profitable and you're failing to become consistent. You need to trade with small size. Leave your ego out of the market. Trade with small size, regardless of your account size, because I've seen people, even me when I first started, I would try to swing for, 4-figure days, 5-figure days when I first started out, because I saw people on YouTube making 5 figures, 6 figures easily, right? So we compare ourselves and we let our ego think that other people are doing it so easy, then we could do it so easy without the knowledge and without the experience. Think about it like this, doctors, surgeons, they go through years of schooling before they could put on a surgery or before they could examine a patient. So what thinks as a trader, you're going to learn something by reading a book, and tomorrow you're going to know the market in the ins and outs and you're going to become a millionaire. So too many people think it's easy. They think they know what they're doing and they blow up a large account without an edge. That's fine. You have to lose in order to win. So for you to gain this experience, and if you've done that, totally cool. I've done it, and if I didn't do that, then I wouldn't contribute a lot of my success to where I'm at right now if I didn't go through what I did as a beginner trader. So in this period of 1 to 3 contracts, you learn via trial and error. You learn what your edge is, you develop your system, you learn from your wins and losses without hurting your account. You're going to have paper cuts, $20, $50, $100. It's fine. You have to lose in order to win. There's no way around it. If I didn't learn from my losing trades, I would not be a successful trader. This is the period where the most work needs to get done. You need to dissect your trading from the inside out. A main reason why I created the course was to give structure in other traders and even these YouTube videos, to give structure to other traders so they can come up with their own style, their own system, their own edge, maybe bouncing it off my ideas, bouncing it off my videos and how I trade to come up with something that fits their personality that works out for them the best. So in this period, you need to dissect your trading from the inside out. You must review your trading journal. It needs to be your Bible. If you do not journal your trades, you are going to be lost. I have a weird, I don't know what it is, but every time I review my journal on the weekends and review the trades that I take really good setups the following week. And when I don't do that and I kind of brush it off, I feel a little lost. So you must review your journal. That's your Bible. That's how you figure out the most things that need to be done. This is the only shortcut to figuring out what works for you and developing your edge. If you don't have an edge, you are gambling, you are not trading. So once you develop your edge, you build your system, you have real skin in the game without losing a large amount of money, you learn your emotions and mental game. So that's a big one that I didn't mention in this is emotions. So if you want to add another one, I think these two are the most important to begin with. And then once you develop these two things, an edge and proper risk management, then you need to work on emotions. If you can't control yourself, you're never going to be able to win in the market. So I think psychology and emotions play a big part as well. Go through my psychology videos. The ones in the course are gold. The ones on my YouTube are good as well. But you need to have real skin in the game without losing a large amount of money. You learn your emotions and mental game, and then you could scale up once you're consistent with 1 to 3 contracts for at least 3 to 4 months, maybe 2 months, depending on your confidence level. But a big portion of this comes down to ego. Trading is it's the best business because it's extremely scalable. What business can you wake up, for example, in this Tesla example, right? So this is actually a good example on risk management. So I pulled up some options on here on Tesla. Let me pull up right here. These are the 1080 calls. So let's just say we play Tesla off demand, right? This thing starts selling off. Then we start to bounce. And we get long up here at 1071. Stop loss below the lows at 1066. If we were to look at the option contracts on Tesla, at the point Tesla bounced off demand and maybe we entered above 1071, these were around $8. So every contract we buy, it's $800. It's a little expensive because of the conditions right now on Tesla as I'm recording this. So they're $8 a contract. We get in, let's just say, with 30 contracts. We're in with $24,000 and we have a $40,000 account and we're trading without an edge. We don't know supply demand, let's just say, and we're just entering because we see Tesla coming up. So we see it coming up. We get in with 30 contracts at $8. Then 3-4 minutes later, this thing starts moving lower. And now all of a sudden the contracts are at $7. Now we're down $3,000 in 3 minutes. We start freaking out. Our emotions are not in check. We're not implementing proper risk management because, Tesla never broke below the low. And we give it another minute and another minute passes and now they're at $6. So now we're down $6,000 on a $24,000 investment in $3. What do? We freak out. We exit the position prematurely. The main culprit for this was we were in with too heavy size and we never respected our risk because on the underlying on Tesla, this thing never broke the low. So that's really bad trading right there. And if we held, maybe we traded instead of 10 or 30 contracts, we traded with 10 contracts. Or hey, maybe we traded with 3 contracts. And now when Tesla was selling off, we're down only, $4 or $5, maybe even $600. But when this thing starts rallying, this goes to $1,600. And now we made a $2,400 profit on a $400 risk or a $600 risk. And we get our 4-to-1 risk to reward. Where if we implemented proper risk management, we traded with smaller size, we wouldn't have got hurt. We wouldn't have got mentally attached to the market. And this could have been a successful trade as this thing bounced off demand perfectly. So a real recipe to blowing up and how I see a lot of traders fail is they're going in with way too much size. It boggles my mind. I don't know why traders do it, but they go in too heavy. Let me pull up this SPY example again. So this was off the supply zone and the same concept here, right? Remember what I said earlier? So now SPY hit supply. Let's just act like we know supply and demand, right? Let's just say we have an edge, but we failed to implement proper risk management. All right, we're getting short blind puts on the break below VWAP after it stops at supply and we move down. At this point, SPY was, let's just call it $1.60. SPY puts we're at $1.60. 15 minutes later, they go down to 90 cents. We get a little rally up back inside of the supply zone. If we're in this position short, we got no reason to panic because it never broke the high. It never got back above supply. And if we implemented proper risk management where our position size was acceptable according to our account size and how I recommend everyone to trade when they're still developing their edge in their system, then we should have no reason to stop out. And these went from a low of, let's see what this was, 89 cents to a high of $3.11. That's a 240% gain in about an hour and 20-minute period from the supply zone and from the sell-off. So once we understand this, we could scale up. The market has cycles, it presents different conditions. So you need to learn different environments. That's why I say give it at least, 2-4 months. So you learn different environments, you understand volatility, you understand how price gets affected. And then once you get consistent, just slowly start scaling up. 1 to 3 contracts, then maybe go to 5 to 10, then go to 25 contracts, then go to 50, then go to 100. If you follow the same process on the chart with, let's just say, 1 contract, nothing changes it. Only thing that changes is you're adding an extra 0 from going from 1 to 10 when you enter your order. It's the only thing that changes. But because we're in with larger size and we're connected to our money, we're attached to it and not following the process, our emotions get involved and we struggle. So I just seen a lot of people try to go from 0 to 100 in this game and it results in failure. The faster you come into the market, the quicker you leave it. The market is not going anywhere. It'll be here tomorrow. It'll be here next week. It'll be here next year. The process is so much more important than the profits. Focus on this and watch how a lot changes. So I think I'm going to end the video on that note. Comment if you have any questions. I'll go through them all. Like this video. I would really appreciate it. And definitely check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra charge. I will be raising the prices pretty soon, so take advantage of it. But I'm ending it. Peace out.